All right, guys, what's up? Alec back with another stock market investing video. And today we have the favorite video on the channel. It's going to be Sunday Stock Talk. It's going to be 13 stocks to watch for the whole week and 13 price points to get in at these stocks. Now, you'll see today I am up $81, and that's all because of crypto, Litecoin, Bitcoin, Ethereum. It is Sunday, so the markets aren't open, but the crypto markets are open indeed. So we're up about 2,900 this month, which is looking pretty good, about 24%. We're up 40% in the last 3 months, and we have a buying power of $11,000 currently too. But let's get right into the video. Make sure you have your pen and pad ready, and so you can put on all the price alerts and jot down a few notes about these companies too. Okay, so the first one up, we have a long-term hold. It's going to be Wix.com, ticker symbol WIX. And look how much they absolutely shot up from the shutdown in February and March. And that's because everyone wants their own website. A lot of businesses moved online. And when you're online with your business, you need a nice professional website. Now, Wix is one of the leaders in do-it-yourself kind of websites. So they are going to be growing consistently over the next 2 to 3 to 5 years. So they're definitely one you're going to want on your portfolio. Now, from June 23rd, it looks like they set a new resistance and support that it's actually been following consistently for the last 6 months. So I would be trading off of this resistance and support here. And I would love to get in Wix right around $250 a share. At that point, I'll probably buy like 2 or 3 shares of Wix. Probably closer to 2, and then wait for it to hopefully even drop below 200 so I can pick up some more shares too. So overall, I really like this business and their business model for the next few years. I think it'll be very profitable. But it looks like they're going to also be setting up for a swing trade too. So if you want to get around 250, you can swing it all the way up easily to like 300. So I think a 10 to 20% gain is definitely possible, but personally, I'm going to be holding for long term on this one. Next, we have a great company, FedEx. Everyone knows them. Everyone loves them. Up about 74% in the last year consistently is a very good stock to be looking at, especially with the recent boom. So as you can see, in 2016, they were down to about 127. And it looks like they rode up for, 2 years? And their stock price showed consistent growth over 2 years, all the way to 271. Keep in mind that's pretty much where the stock is today, is right around 274. It's actually 289 to be exact. But it looks like they're trading right around this resistance here, current day. Now, once they took 2 years to rise up to 274. And then what happened the next 2 years? So it looks like they have a cycle going on, 2 years up, 2 years down, and they went all the way down to $150, $140. Now you see I didn't take March into consideration because that was a once in a 100-year event to get them down all the way to $111 a month. So we won't really focus on that for now, but it looks like they went all the way down to $150. Now, granted, the world is changing and a lot more people are ordering online. Obviously, that's FedEx's business model, is when people order online, whether it's Amazon, whether it's just any kind of shipping, international, domestic, UPS and FedEx are the two companies that people think of. So after that, with the whole shutdown, come March and June, everyone starts ordering stuff online, and you see their share price absolutely exploding to current day, 289. So in my opinion, I think it's definitely possible to get in FedEx right around $200, right around the $200 mark, 220. Even if you can pick up some around 220, I think that's totally fair. Remember, I never buy if we just take this section into consideration, and if we could zoom in, which I think Robinhood will eventually let us do, zoom into this graph here, like you can do on TD Ameritrade. The thing is, look at this graph. It's just a straight up line. It's like a giant roller coaster, you can think of it as, and you're going up in the beginning when you're ready for the big fall, and you're going up, and a lot of stocks are like this right now, in my opinion. It's going to have to at least fall a little bit. It's not going to just go to 400 to 500. There's only a few stocks that have been able to pull that off, like Zoom and Tesla. And unstoppable growth days in the market are going to be behind us. And I doubt Tesla will see another 800% in the next 8 months or something crazy like that. Maybe 100% in the next 2 years is something more realistic for Tesla to experience. But I doubt companies will continue to see that amazing growth that they did the last 6 months. Such explosive growth is only seen once in a while, and that's about a 200% gain. And so the point of the story is don't buy during all-time highs. Wait for at least a little bit of a dip. Down to 220, I think, is definitely reasonable. Even their bottom support, their most recent support is 250 to 240. So I think you can definitely get in right around 240, 250 if you are a little bit impatient. But if you're more of a patient investor like myself, like I don't have to be in FedEx stock tomorrow. I have a bunch of other stocks that I'm looking at. But the thing is, it goes below $200, FedEx, I honestly can't pass it up. I'd be doing myself a disservice at that point. And after that, we have Walgreens to see if the walls are painted green. No, I'm just kidding. But we have here is a great stock, and they can be benefiting off Pfizer and Moderna's vaccines because they can be the place that people go to for vaccines. So what you'll see is I actually have $360 in the stock, nothing serious, with an average cost of $41. You'll see as a headline here, Walgreens may begin vaccinations at nursing homes before Christmas. So you might want to read a little bit into that if you are thinking about buying Walgreens Boot Alliance, WBA. And if we look at the 3-month chart, it looks like the support down here is 33 to 35. Where personally I would want to be buying is right around the $38 to $39 mark and then hold it for a long term. It looks like they've been actually suffering for a few years. So personally, I wouldn't put a whole lot of money into the stock, but they could be one of those ones that benefit extremely from Pfizer and Moderna. So it's definitely worth looking into, and it's definitely worth being on the list too. And then after that, we have Dropbox, one that I have been talking about on this channel since it was at $17 and $18 a share, which you'll see was like right here, 18. And if you even go back even further, it was at 17 at one point on November 2nd. So if you bought in right at the bottom, we're up about 34%. Personally, I'm up about 20% because I was loading up at $19, $20. And on my other account, my Webull account, which I'll actually put a screenshot here, you can actually see I hold even more. And I have been taking profits out too. So I had like $2,000 or more, probably like $2,500 into DBX at one time, but I've already cashed out a lot of that. I think I've already taken like $500 profit. I think that this stock could easily run up to over $40 a share, but that's just my personal opinion, and that's over a couple months to even a couple years. It just depends. Because the good thing about Dropbox, it's kind of like Slack or Work. They could get acquired by a bigger company. Dropbox is one of those companies that is not worth that much. Like if you look at their, we have an option out on them too. We're up 69% on the option, by the way. But if you look at their market capital, they're only a $9 billion company. They just were about a $7 billion company, but they've been moving up. So you might see someone wanting to buy this company out because it's not the biggest company in the world, and they offer a lot of value in the cloud storage. They also own HelloSign, which is a huge competitor to DocuSign, and that's a huge space. So definitely don't be sleeping on Dropbox. I was telling you guys to buy at 19 and 20, but I'll raise my price alert a little bit on them to 21 to even 22. If you can get in at 21, 22, that's awesome. Obviously, if you can get in at 19 and 20, that's going to be the best. So make sure you definitely watch out for this one. All my close friends list, were actually buying a lot of this one because they saw how much I was buying in real time when you can see my buys and my sells on my close friends story. And then right after that, we have another explosion stock. Look at that absolute gainer. They were at, what was that, about $85 at one point a few months ago, maybe about a year ago now, and they're at $174 now. Now, a few weeks ago, I did have this on one of my lists. About $120 a share was the price point I was saying to buy at. And a lot of people were even telling me that it was a lot even at that point, like commenting on the video saying, oh, that's a lot of money for Disney stock. Yes, the parks are closed and they are closing and they might be closed for a long time, but their streaming service is where they're actually getting a lot of their money from. Now you'll actually see we're up 35% on Disney stock. We bought it at about 129. And that's the price point I'm going to raise it to from 120. I'm raising it to 130, which I think is definitely realistic to get in. Remember, just a month ago, this stock was 136 a month ago. So in my opinion, any stock in 1 month can easily go back to it down, especially because 3 months ago, it was all the way to 120. So anything that risen 28% in 1 month, in my opinion, it can easily lose 28% in 1 month just as fast. Especially if they have news behind them, that could be a huge catalyst to why they could lose the 28%. Like Disney, for example, if they put out news that, oh, their sales on their parks have went down 75% and they shut a lot of their Disneyland, Disney World down, and they put out like an article like that, or they're forced to put out an article like that, it can easily tank the stock like 40% in my opinion. So definitely have your eye on Disney stock. They put out their streaming numbers for Disney Plus and they absolutely killed it. There's a few articles on them down here too. So feel free to read those ones. Let me know what you guys think in the comments below on Disney stock too. Next, we're going to be speaking about Tesla, everyone's favorite electric vehicle stock. In my opinion, they're better than NIO, as you guys already know if you are a follower of the channel. In the last month, they're up 46%. Remember, they were just at $400 and now they're at $600. So that's a big thing to consider when buying into Tesla stock. Before that, they were following the same support and resistance for about 4 months or so. From August all the way into November, they were following that $400 to $500 resistance and support. So I would definitely look to be buying into these numbers right here, anywhere between 400 and 500. If you can start your position at 500 and you want to hold for long term, that's fine. If you're more of a swing trader and you're looking for a quick buck, I would try to buy a Tesla closer to 400, obviously, and then swing trade it all the way up to $500 to $600 because I think it will go above $600 eventually, but it has to see at least a little bit of a pullback before it continues to soar. And there is some interesting articles down here, so I would recommend reading this first one, the second one, but the third one's really interesting. Are shares worth $90 or $780? Wall Street can't decide. So my price point, remember, is $400 to $500. Some analysts have this Tesla's price point all the way down to $90, where it was in January, which is not totally unreasonable. You know, I mean, keep in mind, if it went to $90, that would still be way above where it's been in the last 12 months. So remember, in the last 12 months only, life has changed for Tesla stock 1,000%. Look at how long it was trading between these numbers here. 5 years almost. Well, probably closer to 3 years. It was trading at $45. The stock didn't even move from January. If you go back further than 2015, it was still trading like this. Look, it didn't even move from 40 to 30. It went to about 70, was like as high as it went, and then back down to 40 and 30. And this was 5 years the stock did this. And then all of a sudden it exploded to crazy heights, and it's up 1,200% in the last 5 years. So when investing in Tesla stock, if you're a safe investor, you can't just turn the other cheek to that and say, oh, well, it never happened. 12 months, it's up 741%. You always want to be safe, check your back, check your six, do all your P's and Q's, and make sure you're up to date on all your information with whatever it is. If they're a good analyst and they're known to be a good analyst, you got to look and see what they're saying. So it's JPM basically who is saying this. So Goldman Sachs has a price target of 780, while JPM Chase is $90 a share. So I would recommend at least reading this full article. It's pretty interesting. But with that being said, we have the next stock on the list, which is NIO, everyone's second favorite EV stock. Some people like it more than Tesla. So they're down about 8% on Friday. They're down 2% in the week. They're down 6% in the month. They're up 128% in the last 3 months. So what do you guys see here if we just look at November 5th through December 12th? So it looks like an easy support and easy pattern. So one way I can actually zoom these graphs is if I actually screenshot it. So look at that right there. What you'll see is one of the most fundamental patterns in trading. So it looks like it's going to be following this support and resistance for a while, about the $41 to $40 mark, and then going up to like the 60 to 50 to 60. So you could try to swing trade. It looks like it's going to be at a bottom right now. But if we zoom in a little bit more, it looks like it's actually breaking supports, new supports. It's heading down. So I would wait a little bit until it finds a bottom and it makes a positive confirmation to trade upward. So once you start seeing some upward momentum from NEO, maybe like a 5%, 10% gain from where it's currently at, then that might be an indicator to actually buy it and swing it up to like $50 or $60 a share. So with that being said, if it breaks the supports where it's at 41.50 right now. So if it breaks into $40 a share, meaning it passes the support, I think it could easily go back down to $30 a share, $35 a share, $25 a share. So definitely keep your eye out for NEO, because this one can fall like a rock in the next few months to few weeks. So I'm putting a price point right around $30 on NEO. And at that point, I'll only put a little bit in, maybe like $200, $300 in at $30 a share. But if it gets to like $20 a share, $23 a share, $25 a share, you'll probably see me putting closer to like $500 to $800 into NEO. All right, so next on the list, we have Amazon right at $3,100 right now currently. And a lot of these companies are following that same support and resistance. Remember, right at like June, July, they established their support and resistance. And this one, Amazon, it's anywhere from 29 all the way up to, at one point, it was like 3,500, remember, too. So keep that in mind. It can easily go to 3,500, which would be about a 20% gain or so, give or take. So I would love to be buying this one right about $3,000 flat. I can see some value in, so I am raising my price target. Remember, before it was $2,900. So right now I would be even willing to go and buy a little bit at $3,050. And I would probably put in like $200 at that point. So if you can buy fractional shares, definitely take advantage of it when it comes to Amazon. If you can't take advantage of fractional shares, unfortunately, it'll probably be better to look at some of the other stocks on this list. So I have over $300 in Amazon. I also have some on my Fidelity account as well. The PE ratio isn't as bad as you think it would be. It's only 91, where Tesla is like 1,600 for their PE ratio. And this is kind of like Shopify and like Wix. It's just one of those big companies that you're going to want to be holding over the next 3 to 5 years. It's definitely going to be taking off because only more and more people are ordering from Amazon. I think if you want to look it up, they're projected to grow revenues by 30% next year too. So if to see this stock splitting, I think it could split. And if it does split, I think we can see 100% gain on this stock. To see this stock at $6,000 in the next 3 to 5 years is definitely realistic. So let's talk about Shopify then. So Shopify, great one, very similar to Amazon, similar business model, people selling things online. Obviously, Amazon is way bigger. Shopify is still a $120 billion market cap, which is absolutely huge. And I think they have a potential of 2xing over the course of the next 3 to 5 years too. This one can also be a pretty good swing trade if you get in right around $900. And then if you swing it up closer to $1,100 or even new all-time highs, I think it'd be very beneficial for Shopify. I'll probably be holding most of my shares for long term because I like their business model and I think they can be growing a lot over the next few years. And they're just one of those easy companies that you can just buy, forget about buying it, and then just hold it for a few years. Put it in your Roth IRA, put it in your 401k, whatever you want to do. These big companies, even like Amazon, Facebook, Apple, I think those are all great ones to have in your retirement portfolio at these price points that I'm telling you to get in at. Even like Disney and some of the other big ones that we've been talking about. Next up on the list is going to be Berkshire Hathaway, and this is going to be the B one because the A one, it's like $30,000. This one's only a couple hundred, 226 to get into Berkshire Hathaway. This is a great company ran by the all-time great, which is Mr. Warren Buffett. If you guys don't know who he is, definitely look into him. He has some great fundamentals, and I take a lot of his fundamentals in my trading. He's a value investor. And a bunch of my techniques and the way I invest actually come from Warren Buffett himself too. So I have studied Warren Buffett. He is a great, great investor. This one, that being said, I would want to buy Berkshire Hathaway under $200. This is another one of those stocks that you can stuff away in your retirement fund and just wait till it ages. Also, it's good to know that Berkshire Hathaway owns an impressive amount of Apple stocks in their fund. So Mr. Warren Buffett, he's super bullish on Apple stock. Well, you can actually see I'm up 27% on them. I actually took a lot of profits out already. They are a $500 billion company, so they're nothing to bat an eyelash at. They're a huge, huge company, almost $1 trillion. Well, to be exact, half of $1 trillion. And their PE ratio is only 15, guys. So they're a great company, especially if you can get in at $200 a share. And here you'll actually see who the CEO, Warren Edward Buffett. And guys, sorry it took so long to get to Boeing stock. I know a lot of you guys are asking questions about ticker symbol BA. So let's get right into it. You'll actually see in the last month, they're up 28%. All airlines have actually been killing it. Jets ETF, American Airlines, Delta, Save, which is Spirit Airlines. A lot of these airlines have absolutely been killing it in the last month, up 28%. And the last 3 months, up 42%. So to see this one at $150 is a little bit hard. But to actually see it at $200 or below $200, again, is realistic, especially with the numbers growing, the cases growing, the hospitalizations growing, the death rates growing. Everything's still growing. So we can see a pullback in airlines, especially because they just had that rally and that run up there too. Now, with Boeing, it's actually very hard to find people that are going to be buying. Now, they're in a business that's hard to find right now. It's a very tough business because nobody's really trying to buy new planes. Like, think about it. Do you think airlines, American Airlines, United Airlines are trying to buy new planes right now? No, if anything, they're actually trying to sell their airplanes. So for Boeing, it's very hard to compete right now. They are obviously the biggest in their industry. The only competitor they really have is Airbus. But the thing is, nobody's trying to go out and buy 747s, planes, jets, fighters, anything like that right now. For at least the next 1 year, people will there won't be too much demand in the air buying new airplanes. So with that being said, I would put a price target right around $200 a share. Anything under $200 a share for Boeing is absolutely money. It has a long way to go to recover too. This stock, I think it could in the next 5 years double. I could at least see it at new all-time highs, which would be like $400 a share in the next couple of years. So if you get in at $200 a share and you want to hold this one for a long term, I think it is realistic to see new all-time highs. But don't be too thirsty on this stock. Even at 150, it's not totally unrealistic because remember, this stock was several times $95. And in 2016, it was $108. So don't rush into the stocks. Wait for the stocks to come to you. There's no reason I'm going to be going out tomorrow and being like, oh my God, I got to get Boeing stock at $230. But the thing is, I'm not saying that about any stock, honestly. But the thing is, if it gets so attractive to me that I cannot pass up a great deal and it gets to 180 at $200 a share, you have my money. And I'll probably buy like 2 shares at that point. So don't be too thirsty with stock investing. I know you guys want to make money, but wait for opportunities to present themselves. And as for the last one on the list, we have Skyworks Solutions, a great 5G stock. We talk about this one on the close friends list. I saved it for the last one, so if you guys that are watching all the way to the end can benefit off this stock long term. This is going to be a long-term trade. As you can see, it established that support and resistance right around June and July, like the other ones have that we talked about. And it's been trading sideways since July 27th. It's been trading sideways, which is always a good thing to look at the sideways trading when you're going to be trading a stock, and you don't want to see like a huge downward growth. This one's showing upward and a lot of sideways trading, so it's one that we definitely want to be taking advantage of. Now, I think we can see this one right at around $120 to $130 a share again for long term. If you want to be swing trading this stock, you can load up on it right around 135, and I think it has swing trade potential all the way to about 150 to 155. Now, with this one, I think we can even start seeing new all-time highs once more of the 5G phones come out, because this is a 5G company and it's great. I'm going to be probably holding this one for 2 to 3 years personally. So I think that this one could get up to $200, $250 a share in the next few years, especially with the explosion of 5G. So guys, that was the video. I hope you did really enjoy it. You took some value on this video. You go ahead and put some price alerts. If you guys want to get into my close friends list, go ahead and go to my page on Instagram. This is it. If you haven't been there yet and you found me on YouTube, a lot of you guys already know my Instagram page though. It's where we have our biggest presence on the internet. And click on client success, this one right here. Once it loads up, go to the most recent ones and go ahead and read through some results that people have been having with my program too. So I teach you guys how to invest into stocks, what to look for, what I look for personally, and also what I'm buying. I put on my close friends list personally what I'm buying and when I'm buying, so you guys are up to date with exactly everything going on in the market, and it has a lot more direction. If you can't afford it, don't worry. You can still get some great value from my YouTube channel. It's the best place where I put out the free information. As you can tell, it's loaded. Every video is loaded with knowledge and value. So make sure you are subscribed with notifications on, so you are getting the videos and notifications as soon as it drops, because sometimes I won't post it on Instagram that a new video came out, or I'm a little bit late. And if you want to get it right away and watch it right away, make sure you're subscribed with notifications on, post notifications. Share this video with a friend if you think that they can find value in it. And comment below on what's your favorite stock. I want to hear about Disney and Tesla, what you guys think about those two stocks right now too. Leave a thumbs up on the video, smash the like button for the YouTube algorithm to recommend my video, and I'll see you guys in the next one, in the next video. Remember, don't time the market, buy the market. Peace.